you've got sort of three big areas of concern. I mean, there are many others, but three main ones. One being in mature markets, debt has just continued to rise. No government is making hay while the sun shines. So, in other words, when growth has been strong, governments have not cut down their debt levels. So they're going higher and higher and higher. And this year, during the pandemic, mature market governments borrowed a tremendous amount. So total debt levels in mature markets this year were up by some 50 percentage points. It's because you have a double whammy, right? You have
Yeah.
much weaker growth of recession, at the same time, heavy borrowings that really pushes up these debt ratios. In the long run, the risk for mature markets is kind of stagflation, weak growth, having to keep rates low indefinitely. That's a big problem. The other problems are more in emerging markets. Can emerging markets, especially the very low income developing countries, are they going to be able to sustain and manage the debt levels that they've built up in a time of weak growth and poor revenues?
I mean, also in emerging markets, we have to pay attention as to what's going on in China, because you've also highlighted the rise in non-financial corporate debt in China, increasing nearly 16 percentage points year on year. I mean, this comes at a time when we've also seen some concerns around recent defaults in China. How would you describe the situation?
I think you'd have to say we've seen this movie before, right? If we think back to sort of 2016 and the concerns about a debt ticking time bomb in China. Look, I mean, it's all good until it isn't. I mean, the question is, it puts so many constraints on what governments can do in terms of stimulating growth, in terms of long-term investment, if you have to keep managing this growing debt pile. And the debt in the corporate sector is also a contingent liability for the sovereign, for the governments as well, right? Because if major companies that are state owned or partially state owned or guaranteed get into trouble, they're going to need assistance and bailouts from the government. So you really have a lot to be managing there. It's a serious concern.
Do you have an estimate as to when this ticking time bomb could go off, as you've described it, in parts of the world? Because I hear you saying, let's not worry about it, given the pandemic is still raging, but we do need to know when this could become a problem.
Typically, what happens is that you will have a catalyst of some sort. And you could argue that this current pandemic has been a catalyst and that it's focused everyone's attention on the rise in debt and the potential consequences of the debt. It could be a buildup in a particular sector. It could be risks in the banking sector, and it'll probably vary by country. But I think one of the things that we're very focused on is the plight of countries that are low income and also climate vulnerable. So you have a whole set of, plus the need to fight the pandemic. So there are a lot of risks associated with their ability to sustain debt in these countries, and it becomes a real policy issue for governments and policymakers around the world.